What's up, everybody? My name is Joe Brown. This is the Heresy Financial Show, and we are now seeing central bankers around the world try and prep the global population for an era of high inflation, given the fact that they are now admitting how little they understand about inflation. It's a good thing we have such geniuses in charge of monetary policy around the world. Ready? Let's dive in. First, a word from today's sponsor, iTrustCapital. If you've taken a look at markets recently, you've seen the stock market, whether it's small caps, large caps, tech stocks, anything, down a lot. Individual stocks down 80%. The index is down 20 to 30%. It is a bloodbath out there. Not only that, but you've found no protection in bonds because, let's be honest, it looks like the 40-year bond bull market is over as rates will probably go higher and higher and higher. And recently, the only asset class that has held up has been gold. Year to date, it is up 1 to 2% right now as we speak. And it is harder than ever to find a way to get your money in your retirement account into gold because, let's be honest, your pension, your 401k, they don't want to make it easy for you to get your money into gold. Typically, you only have the option to put it in stocks, mutual funds, maybe some ETFs. That's where today's sponsor, iTrustCapital, comes in. You put your money in iTrustCapital. It is a retirement account, so you can transfer your existing retirement account or a portion of it, or you can open up a new one with them and make new contributions. And the beauty of this is they allow you to invest in physical gold, physical silver, as well as other cryptocurrencies. This is an alternative investments IRA. It is fast, it is cheap, it is easy, and if you sign up with my link in the description below, you'll get a sign-up bonus, $100 worth of Bitcoin assigned to your account that you can do whatever you want with. You can keep the Bitcoin, you can sell it, and use it to buy something else that they offer. Again, gold, savings, real money, long-term, you maintain your purchasing power, and I use iTrustCapital to buy gold in my retirement account. You can do the same with my link in the description below. Recently, Jerome Powell and Christine Lagarde and others were at the ECB's forum, and Powell said this in regards to inflation. He said, "I think we understand better now how little we understand about inflation. We used to live in a world where inflation was not a problem. Now we're learning to deal with it." So right out of his mouth, we are seeing live admission here how little they understand about inflation, which is really a shocker considering that they were the ones who expanded the money supply by 40% in the last couple of years, and now they're shocked that that resulted in prices going up. Anybody who has ever played the game of Monopoly in their life would realize, hey, if the banker in the game of Monopoly decides to double everybody's money, what do you think's going to happen? People are going to afford to buy properties. When they get these properties, they're going to be able to afford houses and hotels. You're going to be able to afford rent as you go around the board, no problem. Prices are going to go up, and then suddenly what's going to happen is prices will have been bid up because the houses and the hotels and all the properties being owned, now it's going to cost more to go around the board, leading to economic pain and in the game of Monopoly recession, and then somebody's going to go bankrupt. And that's what we're seeing right now. It's literally common sense, something that children should be able to understand. But for some reason, those in power of monetary policy, the central bankers around the world, they print money like there's no tomorrow. Then they're shocked when the inflation happens, and they're equally shocked and in denial when a recession hits afterwards. If you take a look, another thing that Powell said was that the US economy is actually in pretty good shape, which makes no sense considering literally a few days ago, the Atlanta Fed came out with their estimates of GDP numbers for the second quarter of this year, and the economy would already be in a recession if those numbers turn out to be correct because first quarter GDP contracted, and now their estimates are that second quarter GDP contracted as well. So simultaneously, they're saying the economy is in good shape, while another part of their organization Organization is saying, nope, the economy is actually in a recession. And at the same time, they're saying inflation took us all by surprise. We had no idea it would happen. And now we have no idea how to get a handle on it. But as pointed out in this article from Mises.org, price and monetary inflation are within control of central banks and world governments. Stop increasing the money supply. This inflation problem then would correct itself. As Milton Friedman said, inflation is everywhere and always a monetary phenomenon. If you start printing like crazy, guess what? Prices are going to go up because you're not affecting goods and services. You're just creating more money chasing the same number of goods and services. It's going to bid prices up. Simultaneously, if you stop increasing the money supply, you don't even have to decrease the money supply. Just stop increasing it. What you will see is deflation, because deflation is the natural force of history. It's happened since the beginning of time. Things, wealth, goods and services have gotten cheaper over time. Prices have gone down. As long as the money supply stays relatively stable, that's what happens. So we've got natural deflationary forces for all of human history that will win out in the end if all you do is stop messing with the money supply. Stop acting like you can control the economy. Stop acting like you've got all these knobs that you can fine tune and control inputs and outputs across the economy. You can't. All central planners can do is mess things up. Just stop messing with it. Literally, if we paid these guys $10 million, central bankers, central planners, politicians, bureaucrats, if we paid them salaries of $10 million a year just to sit in their office and watch Netflix and do nothing, can you imagine how much better off this nation would be if we just eliminated the cost of their mistakes from getting their meddling little fingers into things and messing things up? It would be far better to take a small amount of that money that we're paying in terms of our costs of their mistakes and just give it to them to tell them to do absolutely nothing. But we instead have to have these people in power that want to change things and want to intervene because they think it'll make things better. And now what they're saying, the consequences of that are now we are seeing central bankers say we are entering an era where low inflation is unlikely to return. That for years preceding the pandemic, we had low inflation, and now central banks need to adjust to significantly higher price growth expectations. Now, you can look at this one of two ways. Either the Federal Reserve and other central banks around the world are so backwards looking, which they are, using data that is put through models that are so wrong, which they are, that now is the time where they're finally saying, hey, inflation is taking over and it's just going to be here forever, that's contrarian indicator. And now that they're finally admitting defeat in the fight against inflation, that we are about to have deflation, that we are about to see things crash, demand destruction take place, and everything collapse over into the deflationary death spiral side of things. That's one way to look at it. Another way to look at it is almost like a soft admission, like they're prepping population for saying, hey, this is what the reality is going to be going forward, because if we do start to get some epic demand destruction and crashes take place where we see the solvency of major financial institutions and major corporations and major governments around the world take place, that central banks are saying, you know what, at that point, we're going to have to step back in. We're going to start printing money again. We're going to start monetizing debt like crazy. We're going to start spending money into existence. And we know now that the result of that is that prices are going to go up. It wasn't doing that for decades where they were printing money, lowering rates, and expanding the money supply. It didn't result in this growing amount of inflation all around the world at the rate that we see today with inflation numbers, and to the extent that we see all around the world. Like, you got isolated pockets of inflation and hyperinflation, but it never happened universally around the world. But the thing to understand about this is that sometimes things in complex systems, they happen gradually, then all at once. Like an ice cube. If you have an ice cube that's 0 degrees, it's just frozen ice. If that ice cube goes to 10 degrees, and I'm speaking in Fahrenheit here, not Celsius for everybody outside of the States, 10 degrees, it's still rock solid ice. 20 degrees, still rock solid ice. 30 degrees, still rock solid ice. But the moment you go from 32 to 33 degrees, bam, it goes to liquid all at once. It's not that those earlier changes in temperature were meaningless and didn't do anything. They built up over time. You needed that energy buildup to be able to have that phase change from solid to liquid. And it's sometimes the same thing in complex systems. It's not that all of the prior momentum was meaningless and that it wasn't doing anything. It's just that sometimes momentum takes time for energy to build up in systems for that phase change to then happen. It's not that that last dollar they printed was the $1 that was too much. It was everything they'd been doing for decades. They didn't recognize the consequences of it, or maybe they did and they didn't care, and they just kept on going, and now the phase change happens. Same thing with inflation right now, that at some point they just said they took it one step too far because of the momentum that they had behind them, the lack of consequences from it before, and now we're seeing a change where everybody in the world is flipping over into inflation. And again, they can solve this if they just stick to not printing and get out of intervening and let the chips fall where they're supposed to, let the recession come, cleanse the system, and cure the malinvestment, cure the misallocation of resources. It'll be painful short term, stronger long term, but if history has anything to say about this, we know that that's probably not what they're going to do. And once the pain becomes acute enough, it's political suicide to let it continue. They're going to step back in and say, hey, we need more intervention. It'll probably come in the form of a CBDC. That's a topic for another video. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.